Okay, let's dive right into this explainer and uncover what's honestly the ultimate insider secret: how to legally hack your credit score using your rent payments. I mean, think about it. Every single month, millions of us write our biggest check to our landlord, and it kind of feels like completely throwing that money away when it comes to building financial leverage, right? For the longest time, the system seemed, well, entirely rigged against renters. But today, we are going to break down exactly how you can turn that massive monthly rent payment you're already forced to make into a literal credit-building rocket ship.
Seriously, what if your biggest monthly expense was actually your greatest financial asset? For years, paying rent has felt like you're this little stickman animation pushing a massive boulder up a ridiculously steep hill, only to watch your hard-earned cash just disappear into a black hole with absolutely zero impact on your credit. It's wildly frustrating. You could pay rent flawlessly for a decade, never miss a single day, but the second you apply for a mortgage, traditional lenders look at you like you have zero financial track record. They'll count a mortgage payment, sure, but they totally ignore rent, even though rent is usually a way heavier monthly burden.
All right, move it on to Section 1, the FICO score revolution, how the algorithm changed the rules.
Okay, so the system has dramatically shifted, and these new algorithmic changes, they've unlocked a massive loophole for renters. Look, for decades, the credit system moved at a glacial pace. The original FICO baseline was set way back in 1989. And for the longest time, the gold standard was FICO Score 8, which launched in 2009 and notoriously ignored rental data altogether. But then, a massive victory for consumers hit in 2022. The Federal Housing Finance Agency officially validated FICO 10T and VantageScore 4.0. This literally changed the game because it mandated the integration of alternative data, specifically your rent payments, into the everyday risk assessments lenders use.
To put this in perspective, think of the old legacy FICO 8 model like an old Polaroid snapshot. It just took a blind, point-in-time snapshot of your current balances at one specific moment. It didn't care at all about your trajectory or how hard you were working to stay afloat. But the new FICO 10T model, it acts way more like a financial detective. It tracks a continuous 24-month trend of your habits. So these modern trended scoring algorithms actually reward you for consistent positive behaviors. Paying your landlord on time, month after month, is exactly the kind of responsible trajectory this new algorithm is hunting for.
And here's why this is an absolute game changer. Payment history isn't just a minor factor, it controls a whopping 35% of your entire credit score. Whether lenders use the legacy FICO 8 or the brand new FICO 10T, payment history is the undisputed king of your credit profile. That makes your consistent, heavy-hitting rent payments the ultimate hack to target this specific metric. You're taking your single largest reliable expense and injecting it straight into the most heavily weighted category of the entire algorithm.
Okay, so Section 2, hack rent for perfect credit. Let's get into the execution strategy.
The crucial point here is knowing exactly how to feed your rent data into this new algorithm. Because let's be real, your landlord isn't going to just graciously do it for you. This is where fintech platforms step in as the ultimate middleman. Platforms like Bilt and Kickoff bypass traditional credit checks entirely. They basically intercept your normal rent payment and turn it into a verified trade line on your credit report. You've also got ecosystems like Self and Ava that link to your bank account or use alternative credit builder loans to report positive data. The point is, you no longer need to scrape together massive security deposits for a secured card. You just reroute the cash you're already spending.
The absolute beauty of this hack is that it forms a completely frictionless 1-2-3 blueprint to automate your credit growth, and you don't have to change a single spending habit. Step 1, you route your rent through one of these platforms. Step 2, you make your normal monthly rent payment exactly like you always do. Step 3, you just sit back and watch the bureaus automatically record that positive data. It's this seamless background process that works tirelessly to build a top-tier credit file while you just, live your life.
Let's look a little closer at Bilt Credit Boost as an example. So if you use Bilt, they report your on-time rent payments to all three major bureaus, Experian, TransUnion, and Equifax, for absolutely free, zero cost to you. And what's really incredible here is the built-in safety net. They only report positive data. That means if there's a simple administrative delay from your property manager, a weird banking glitch, or a lost check, it won't suddenly tank your credit profile. The whole system is designed with strictly upside potential.
And the results? Honestly, they are staggering. Look at this number, 86. Data from Kickoff shows that users with starting scores under 600 saw an average increase of 86 points in just 1 year of on-time payments. Stop and really think about what an 86-point jump means in the real world. That is the literal difference between subprime and prime. That kind of leap can secure a mortgage, drastically slash the interest rate on your next auto loan, or finally get you approved for that premium travel rewards card you've been eyeing forever.
But wait, Section 3, beware the utilization trap, because you definitely don't want to ruin the hack.
See, there is a massive trap that can completely ruin this entire strategy if you aren't paying close attention to how the new algorithms process your data. While you're actively hacking that 35% payment history slice with your automated rent payments, you absolutely cannot ignore the 30% slice dedicated to your amount of debt. These two factors are constantly battling each other for dominance, and combined, they make up almost 2/3 of your entire credit score.
This amount of debt slice is driven by your credit utilization ratio, which is basically just the portion of your available credit limit that you're currently using. And here is exactly where people get crushed. The new FICO 10T model heavily penalizes consumers it classifies as revolvers. Basically, a revolver is someone who carries a high balance from month to month. Under these trended models, letting your balances spike sends an immediate red flag to the system. And that spike, it will violently cancel out all the positive rent reporting gains you just worked so hard to build up.
So, to beat the algorithm, you need to master a specific tactic called the AZEO strategy, which stands for all zero except one. To pull this off, you have to understand the absolutely critical difference between your statement closing date and your payment due date. Honestly, this is the biggest aha moment for most people. Banks report your balance to the bureaus on the statement closing date, which is actually weeks before your actual due date. So if you wait until your due date to pay off your card, your payment isn't late, sure, but the bureaus will still see a massive balance, and your utilization score will completely tank.
The insider's secret here is paying your bill mid-cycle. By just tapping Pay on your banking app well before the statement even closes, you're actively outsmarting a multi-billion-dollar algorithm. You force the banks to report a near-zero balance to the credit bureaus. Doing this effectively tricks the point-in-time snapshot of the legacy models, while simultaneously proving to the new FICO 10T trended model that you're a highly responsible transactor who always clears their debts, rather than a risky revolver.
All right, Section 4, your credit building blueprint. Let's put it all together.
Okay, let's wrap this up into a highly actionable master plan you can use today to take total control of your financial profile. Consider these your universal credit score boosters. First, automate your rent reporting through a platform like Bilt or Kickoff immediately. Seriously, don't leave those points on the table. Second, strictly keep your overall credit card utilization under 10% to keep the algorithm happy. Third, outsmart the system by paying your balances before those statement closing dates hit. And finally, actively monitor your trended data via Experian to ensure you're on a positive 24-month trajectory.
You know, the most empowering part of all this is that because these new trended algorithms look at your ongoing trajectory, it is literally never too late to put past credit problems behind you. If you feel trapped by past financial mistakes, hear me out. The algorithm cares about who you are today and who you're becoming over the next 2 years, not who you were 3 years ago. These data models are specifically designed to reward recent positive behavioral shifts. Your past mistakes completely fall off the radar if you establish a robust positive trend starting right now.
So the tools are finally here, the algorithms have definitively shifted in your favor, and the days of rent being a financial black hole are officially over. The only question left is, are you going to keep treating your biggest expense like a sunk cost? Or are you finally going to make the system work for you? The algorithm is waiting. Take control, implement the hack, and start building your financial future today.